Well, hello, everybody. Welcome to the Trading with Ashley show. So, I have got something to share with you that you're going to love because I have been teaching my adult children how to trade because I want them to enjoy the freedom that I have being able to do whatever I want, whenever I want, and I live life on my terms. And I saw that they were starting down a path where they were being more and more restricted in what they could do and how much time they could spend with their families. And after begging and pleading them to please just give trading a try, they agreed to it. So we've been at it now for 4 weeks. We are in a text group together, and when I find a good quality setup, I go ahead and send it out to them, and then they in turn go and look for other quality setups. So I'm trying to teach them how to fish. So I had an idea, and I wanted to clue you in on my idea. So what I want to do for all of you, since I'm already doing the work anyway for them, I want to, as part of my credit spread challenge that I am going to be doing in my new Trader Network, I want to call those same plays out for you. So if you want to be a part of this and get the same exact trades that I am giving to my children on a regular basis, then you could become part of the New Trader Network, and then I will teach you how to do this. So the New Trader Network is all about going slow and being in a learning environment and not taking too many trades all at once so that we can watch our trades and adjust accordingly. And so what I am going to do to help those that join the New Trader Network, I am going to be hosting a live call with all of those members on September the 4th, and I'm going to train them on how we are going to do this credit spread challenge. The challenge actually kicks off on September the 8th, so they have plenty of time to watch it and ask questions, because I just don't want to call trade signals. I actually want to teach people how to do this because it is a life-changing skill. You can join with a direct link below. You don't have to speak with anybody. You can just go ahead and join. It's a monthly fee and you can cancel at any time. So I am changing this up a bit because I want to ensure that you will learn this, and you won't learn it if you're too afraid to jump on a call and speak to somebody. So I'm trying to make it as easy as possible. Now, for those of you that want to be a part of my larger community, I do require a phone call to go through that. It's a little bit more of an investment, and I want to make sure it's a right fit before you commit financially to the larger group. But if you're interested in the credit spread challenge and you just want to join my smaller community to see what it's all about and learn exactly how I do this, then that's with the link below. Okay, let's get into the content for today's video. So I have been researching companies as a part of this project with my children and teaching them how to trade. And I have come across 4 particular stocks that I want all of you to keep on your watch list. Now, why do I call it a watch list? Well, when you are looking at different stocks, I know the tendency is to just jump in and just start buying the stock. But there's certain levels that we need to consider so that we get the best possible entry. So I am going to go over these 4 stocks with you. I am going to give you their 1-year price target, and I am going to give you a potential entry using the Fibonacci method. I haven't discussed this before, but it is a really good method to look at where a price movement may go and also a potential entry, because stocks have a tendency to want to zig up and down. It's like being on a roller coaster. And if you want the best possible entry, and if you want to look at a realistic target, the Fibonacci is a great way to look at the technical analysis for a stock. So we are going to jump into the computer and take a look at these 4 stocks, potential price targets, and potential entries. First stock we're going to go over together is Robinhood. Now, I've been talking about Robinhood for quite some time with all of you, and definitely blessed to have gotten it much lower than we are now. But the Robinhood story has continued to develop, and they have a lot of other potential things that they are going to share with the broader audience that will continue to push this stock forward. So let's look at the tailwinds. The tailwinds are the strong retail following. That includes you and me, especially Gen Z and the millennials. They are expanding into credit cards and retirement products, so they are pulling in a larger type investor with more money, and that helps quite a bit if you are trying to attract money to your platform. They are highly liquid in options market, and this is perfect for the income strategies that I like to teach. Now, let's talk about the headwinds, the things that you need to watch out for. Regulatory scrutiny on trading practices. So that could throw a monkey wrench in some of the things that they want to do. So we need to keep that in mind. There is heavy reliance on retail order flow. So if something changes with that, now everyone remember what happened with GameStop and how that was so unpopular and people voted by pulling out of the platform, and that could be something that is a headwind for them. And then they are definitely sensitive to trading volumes. And so if the stock market goes down significantly, then there could be the sense that the trading volumes would dry up. And also they do a lot of crypto. So if crypto goes down, then it may give the impression that the trading volume will decrease on the crypto side of it. So let's talk about the best possible entry. Now, I don't know if we're going to get to this point anytime soon, but it's looking like 68. If you wanted to get rock bottom prices on Robinhood, if we have some kind of dramatic pullback or some black swan event, or we go back to something like we did in April that suppresses the market, then 68 might be a reasonable big entry. And I say big entry because at that point, you would probably want to load up on the stock thinking that it won't go much lower than 68. Now, there's other levels to consider. When I do my other videos, I will show you those other levels if you're going to start to trade it. And then the 1-year price target, looking at the Fibonacci extension, we are looking at anywhere from 145 all the way up to 180. So there is a lot of life left in this stock. So that's what's very exciting. And gosh, we know how quick a year goes by. So that's Robinhood. Next, this is a huge retail favorite. It's SoFi, and SoFi has woken up from a long winter's nap. We've really been enjoying trading it within our community. So let's talk about the tailwinds. It's got the growing fintech ecosystem. It's got lending, investing, banking. It's rising retail enthusiasm and strong brand recognition. So SoFi Stadium and all the other, they have a lot of great marketing practices that really bring this home for others that are wanting to start to get into the stock market. This is the stock that I always recommend that they get into because it's a very profitable company. Volatility does support high options premium, so that's perfect for the income strategies that I like to teach. Headwinds, well, competition with traditional banks and fintech rivals, that will potentially put a little bit of damper on SoFi. You've got the execution risk of scaling across multiple verticals. So they're trying to do a lot, and there are expansion issues when that happens. Profitability is still developing despite growth. So they need to figure out how to keep more of the money that they're bringing in, but that will continue to develop over time. So if we look at the best possible entry, around $16 or $17. And I mean, it is not going to be easy to get it at that price, but if we have anything that suppresses the market, then look to pick it up around that, anywhere I'd say $16 to $18 range. Now, where are the price targets? We're already enjoying the price targets right now. We did some great trades the other day looking at potential price targets. And so if you look at 32 all the way up to 39 or 40, 1 year from now, this is definitely one that you probably want to start nibbling at, not just put it on your watch list. Okay, here we are with Rocket Lab. It is on a heater, and that is not just a play on words. It actually is heading off into the stratosphere. So this one is very exciting. It is popular with retail traders as well. The tailwinds, it's a key player in this emerging space economy. Strong revenue growth forecast, which is great. They continue to grow year over year. It's expected anywhere between 36 and 40% year over year growth. They do have partnerships with NASA, defense, and satellite companies. So this is one that started getting a lot of attention once there was tension between the White House and Elon. And so this is another potential player in that game. What are the headwinds? High capital expenditure requirements, competition with SpaceX and Blue Origin, and then valuation risk if the growth does slow. So that's what we'll keep in mind. Now let's look at potential entries for this. Entries anywhere between 29 and 30 may be reasonable. And then if you're looking at 1 year price targets, and this could skew high, you see the big range there, anywhere from 66 to 83. So this is another one that you definitely want to watch and look for the perfect entry. Finally, let's take a look at APLD, Applied Digital. Now, this one got a lot of attention once everyone realized that NVIDIA had a vested interest in it. And it makes sense, right? Because it's the strong AI data center demand is a tailwind for this one. and then they are at an attractive relative valuation, and analyst targets imply a potential 200% upside with this stock. This is very exciting if you consider getting in at this level. Headwinds, execution and project delivery risk, competition in HPC and AI hosting, and volatile sentiment in AI infrastructure stocks. And this one, it's not yet profitable, so I want you to keep that in mind, and it could have a lot of pressure on it if the market pulls back. So the best entry, if you can get it, it looks like it's going to be about $10 based on the Fibonacci retracement, and then the 1-year price target, we're looking at a pretty good range, anywhere between $21.50 and $26.50. Now, if you liked that and you want a little bit more information about these stocks, well, I have even more for you. The next video I do, I'm going to actually go through and look at some potential trades that we can take on these specific stocks. And we're actually going to look at some credit spreads, because that's a really good way, especially for a smaller account, for you to get into the game. Okay, so I hope that whet your appetite. I hope you study these stocks a little bit more and you get ready for my next video. Remember, if you're with me, Trading with Ashley, there is no trader left behind. Now, if you want to watch one more video that will help those of you with a small account get into trading, you can watch that video right here.